Hey guys, yeah, welcome again. So quickly, let me show you how I engaged Euro USD this week. As you can see, my maps here. Yeah, I like to call it my maps. So the same strategy every time. Never tired of it. Go to your weekly time frame first. Have an hang of what price wants in your weekly time frame. Yeah, this was the time frame combination I was talking about in one of my videos. I won't be talking about it. I want to show you how I made plain ratio 8 on Euro USD this week. Everything is possible, guys. Anything is possible. You can sit on your hands and wait for the right time and backtest, master this thing. It works. So yeah, so I saw that price took out this low and was rejecting from a very high resistance. Yeah, high resistance. Even though my monthly, even though I'm still looking a little bit bullish, but I was anticipating a little bit of retracement because price just came into this fair value gap. So it was a pinch to this fair value gap on our monthly time frames by getting a little bit of retracement into this other block. So price can continue upward, or price can decide to come down to this fair value gap. Whatever it is, our weekly time frame will help us in interpreting that properly. Remember, we are an intraday trader. We want to pick what the problem because we want to receive what the market is giving us per time. Yeah. So yeah, last 2 weeks candle ended bearish, right? Yeah, you could have said, it's not really bearish. Price came into this other block, it's going upward. It's still bullish. Yes, I know. However, this is what I'm seeing. This is what I'm seeing. You see this huge impulse move to the downward and to the downside. This was markets telling us that sellers, they want to do probably they want to come into a point of fair valuation. The fair valuation when let's say you have an asset that's cost that was worth $5,000 5 years ago. Let's say a building or a stock or whatever worth $5,000 before, let's say 5 years ago, and now you want to sell off. The present market price is around 50,000 USD. Then there's a buyer that wants to buy but doesn't want to buy at that price. So what price is fair for both the seller and the buyer? Let's say 15,000. The market price is 15k, right? Let's say 12,000. Let's say 13,000. Let's say 10,000. Okay, both the buyer and the seller. So the seller decides, okay, since I bought this thing around $5,000 5 years ago, now I can sell it for about $12,000. Can you see that? Even though it sells at $12,000, which is not the current market price, it's still profitable because he bought it at 5,000. Now the person who just bought it for $12,000 can decide to hold it for another 5 years, whereby you can now sell it for about 25 or about $20,000. Can you see that? It's still that's how the market moves. That's why you will see a quick impulsive move to the upside, a bullish move, a retracement, then a bullish move again. Sorry, then another retracement. So you see why I said that. That was why I was anticipating what a little retracement to any reference point. So since I know that price move from an high to another low, from a low to another high, from external liquidity to internal liquidity. So price took out this liquidity, this old high. This is June 30th, the week of June 30th. Took out this high to move into what? To add a pinch into this fair value gap on a monthly time frame. And I was anticipating that price will come down to this low. Last week it didn't do that. Last week price was dancing. So how do we engage markets? How do you engage price since we've had our own interpretation on our weekly time frame? Go down to your 1 hour. To your daily time frame. What are you looking for in your daily time frame? You want to draw out your reference points. So once you map out your reference points, you can then go to your 4-hour time frame to do what? To refine your reference points. Get that? So on our daily time frame, we can see this was Friday. Yeah, Friday ended this. We had a green candle, but that doesn't mean it is coming down. This is a contraction candle. It still shows that sellers are still eager to push price downward, right? It shows that sellers are eager to push price downward. Remember, these are optimum targets. This low here was our optimum target. The price moved into this fair value gap that was created last 2 weeks, yes, and price range a little bit. It was dancing all around this place. So once you've gotten into your daily reference point, you want to go down to your 4-hour time frame to look for either another reference point that is slimmer and better, or a break in structure on your 4-hour time frame. Then you use your M15 as your entry. All of this is just to ensure that your stop loss is minimal. So what do we have here? Just like we had on our USD JPY, that we had what a break structure to the upside. Also on our Euro USD, price took out this high, right? All of this was happening in our daily time frame fair value gap. Price took out that high and took out all of these lows. Took out this low. With this, you can say that we really had a clean break in market structure. That is a clean VMS to the downside. So I marked this order block. If you had used this order block directly to place your trade, let's see what you would have gotten. It's about 27 pips. If you had used this order block directly to place your trade, can you see this? 1:5.9, let's say 1:6, that is, you would have reached, let's say you reach 1% of your equity, that have given you 6%. Simple and sharp. Remember, we've been trailing this from the weekly time frame. Refine your reference points down to your daily time frame. Then you can now use the break in structure on your 4-hour time frame. Either you can just set your limits directly. Probably you don't want to sit down watching the market. Okay, when we break structure on lower time frame, you don't want to do that. You can just use your H4 directly. Yeah, your 4-hour time frame. And you see all of these are fake breakouts. Broke this low, but there was no fair value gap. Price still move out, you can have hypertension here. When you wait for it to break this low, and you can see your fair value gap here, your fair value gap, and your order block. Quickly, you are done. So let's see how I engage this market on Monday. This week on Monday. So what I did, since price had already rejected from this order block on Friday, I couldn't get a clean entry on Friday. It's because of the time. I'm careful when it comes to Asian session and leaving the trade open on Friday. Imagine you had the trade open on Friday and you just open up here. That have swept both your stop loss and everything. In fact, instead of you having a loss of 1%, you could have a loss of 3% from experience here. So that's why I don't really like leaving trades on Friday, except if the trade is far from my entry. So I had to wait on Monday, and on Monday, price had already sold. I sold downward. But it didn't take out this low. So okay, I can still anticipate a sell. So I have to map this order block, waiting for my entry. And check this out, guys. So on my M15, see what happened. M15 Monday. M15 on Monday. Was it Monday or Tuesday? Yeah. So this happened on Monday, but I didn't I didn't see this. If I had seen this, I would have taken my entry at this point. This fair value gap. Remember, this is a breaking structure here. Wow, how come I didn't see this? This is a breaking structure here, so I have taken my entry here. But I have to wait. So I wait for market to get into that other block on our 4-hour time frame and see this. But the same thing that happened on our GBP/USD. This was forming during the Asian session. So I had to just wait. So first give me this sweep here. It took out all of those liquidity, right? Then took out this low, and I had a fair value gap. Let me take this out so that we can see this clearly. So I had a fair value gap here. So I could have used this as my entry, but this happened already close to the close of the day. So my time frame is GMT +1, and this is already 9 p.m. at night. I was careful of spread. So I had to wait till about midnight for this low to be taken out. When I saw that this low was taken out, that was about 3 a.m. or thereabouts, and I saw this clean fair value gap. Oh, clean, good. Just took my shot, and I used this other block. I didn't care about how big the stop loss is. I think I left it at this point because it was 17 pips. 70 pips is good enough for me, and I went back to my H4, my take profit, and see what we have, guys. This is my trade. So what we have, guys. Yes, we had 1:7.5. So I entered this trade in the early time of Tuesday and I was out on Thursday. Quick one.